Welcome back to All About Money on HKIBC. I'm Feng. Almost 1,000 days from the start of the pandemic, President Xi Jinping has finally made his very first overseas trip. His visit to Kazakhstan and Uzbekistan for a regional security summit included face-to-face talks with his Russian counterpart Vladimir Putin, their first since Russia invaded Ukraine. Let's invite Sian Fenner, director and lead economist at Oxford Economics, to discuss China's economic collaboration with its neighbors. So welcome to the show, Sian.
Thank you.
Let's now first talk about President Xi Jinping's first overseas trip. What do you make of this visit in terms of its economic significance and also its strategic impact?
Well, I think as we're all very aware, US-China tensions remain quite fraught. We haven't seen any easing under the Biden administration. And so President Xi is without doubt looking for alternative strategic and economic ties. It's very much been part of their process of investing outside and securing trade and food and energy linkages. So this is just one further series of a more strategic plan to actually continue to diversify and say that they are open to trade despite these ongoing sort of tensions with the US and China.
And also, Sian, do you think this could signal, for example, a possible reopening of China with the world now that President Xi is willing to go overseas?
In terms of tourism, unfortunately, no, I don't think it will. We're not going to see the Chinese borders open and see a big influx in Chinese tourists to the rest of the region globally, which does mean that any recovery in these economies will only be partial, at least in the absence of China. Very much, we're waiting for the end. When do we actually see further ease in this sort of dynamic zero COVID policy, which we don't see is going to be happening anytime soon.
All right. And also, President Xi Jinping met his Russian counterpart, President Putin, for the first time face-to-face after, the Winter Olympics. So let's talk about the trade between China and Russia. Just tell us, how important is it for the economic tie between China and Russia?
Okay, so actually on an aggregate side, Russia actually only composes a small component of Chinese exports and imports. So it's less than 2% of Chinese exports go to Russia, and it's about 3% go to Russia. Now, without doubt, that's actually increased. I mean, it is, one source of their fuel and energy imports do come from Russia, but it still actually is, swamped by the rest of the region, swamped by the trade with the US. FDI inflows are actually also quite small. So the direct relationship is quite small. What it does offer, and what actually what we've seen with the sort of sanctions on Russia, is it does offer China an alternative source of energy, and they very much do want to continue to maintain this sort of diversified supply of energy, and also at a discount, which I'm sure is also another bonus to this relationship.
I do want to also bring up about the exports, right? Because China in August recorded a sharp drop in exports after a very surprising boom in July. So what do you make of this, significant drop? And what do you think about the outlook for exports in China in the coming months?
Yeah, absolutely. I mean, July was a good figure. I mean, partly this was because we also had some manufacturing production actually normalised. So, this is actually an improvement in both the logistical and the production factors for exports after the Shanghai and sort of more national-wide restrictions on logistics. So that was part of the increase. Now, what we're seeing in the August figures is really we're starting to see that external demand, that weakening in external demand, and that's coming from a couple of sort of factors here. One is that underlyingly as economies continue to reopen, we're going to be seeing this ongoing switch from the consumer goods back into services. So this reopening does actually see that consumer spending should reorientate back onto the services. So that in itself is dampening growth. The other side, of course, is that we've got a very high inflationary global environment, and we've got aggressive interest rate hikes, particularly in the US. And that is going to only see that, particularly if we look at the US and Eurozone, we're looking for both of those to sort of be turning into a mild recession by the beginning of next year. So the outlook for, exports, good exports, which has really been sort of a key driver of Chinese economic growth from the pandemic, is fading. It's already waning, and it's not going to be providing the support to growth that we have been seeing.
And following this, like after the inflationary rising in the U.S. and the European countries, we think that the currency market has been shifting as well, and also on Chinese yuan. After the export decline, the Chinese yuan has been going to, has already passed the psychological level of 7 against the U.S. dollar. So how will the depreciation of Chinese yuan also affect the country's economy?
Okay, so it's interesting. I mean, we have actually had it go, as you said, surpass the 7. It hasn't done that for a couple of years since sort of the beginning of the pandemic in 2020. But it's very much, this is a US dollar strength story. So we actually look at the yuan in terms of its sort of basket of trading partners. The depreciation has not been as significant. Now, that brings into a couple of sort of questions. It's unlikely to have such a significant impact in terms of import inflation. The fact that we do already have sort of, notably sort of subdued inflationary conditions, particularly if we compare it to the US and Eurozone. And the other side is, is it going to have an impact on competitiveness? Will it actually see some capital outflows? And I think the capital outflows is going to be sort of the biggest concern facing the PBOC. They won't want to be seeing any sharp movements. And that's, for example, why we saw that cut in the foreign exchange RRR recently. So it's to try and actually sort of make sure that it stays fairly stable on a trade-weighted basis, but pressure under this story of a really aggressive US interest rate hikes means that the US dollar is likely to remain fairly strong and put downward pressure, depreciation pressure on the Chinese yuan, but also many of the other currencies as well.
Yeah, like other currencies, for example, the Japanese yen also in a record low, and the South Koreans won. What do you make of this current currency market in Asia?
Yes, it's definitely. I mean, I suppose it's China and Japan are sort of the two countries which, if you like, are bucking the trend in terms of either cutting rates, as we've seen in China, or maintaining their commitment to their yield curve control in Japan. Other economies that probably, yes, there's been a big supply side shock to inflation. The fact that we've also had this really strong US dollar and we've had surging commodity prices means that a number of countries in the economies in the region, central banks, have actually started to raise interest rates a little bit more. And that's because of the fear that with this strong US dollar, how it's going to impact their imported inflation through higher food prices and higher energy. So, there is sort of there would be some element there, also trying to avoid some capital outflows, of trying to actually stabilise and minimise how much their currencies are coming under pressure, just because they want to make sure that, inflation expectations remain quite anchored. So it's a tricky position, and, they're very aware that, the hit to growth and the impact of, a recession is that will be the outcome. But the only thing they can unfortunately control really is on the demand side.
And do you think the U.S. dollar is closing to its peak in this rate? Because now we are also worried about there will be a full 1% rate increase, right?
Yeah, I think the August CPI numbers have definitely seen market participants racket up their sort of expectations of where the federal funds will finish the year and actually what their terminal rate is. So we're still looking for about a 75 basis point at the next meeting. And then, total of 150 basis points in total. Now, trying to put that in terms of the US dollar, where it could be peaking, I think it's extremely tricky at the moment. There's nothing to show that it's peaked, and it's peaking now or will be peaking soon. We've clearly got a much more aggressive US Fed versus any of the other economies, which means that you're still seeing that sort of deterioration in their interest rate differentials. On top of that, actually, you're also going to be starting to see increased sort of recessionary fears, global recessionary fears, which could also see, the US be a bit of a safe haven as well. So there's little doubt the US dollar is going to remain quite supported for some time. Where we can see it peak is once we start, seeing some change in sort of the US Fed rhetoric. If we actually did start seeing some improvement in terms of the Chinese economy, there could be two things that actually could see it peak. But for now, it's definitely a matter of, support for an ongoing strength in the US dollar.
And back on the China's economy, I do want to know your thoughts also on the President Xi Jinping's, his economic approach. He's very dedicated into, the common prosperity vision, and he's very different from the Deng Xiaoping era, who is very dedicated to, opening up China in order to boost its economy. So what do you make of the President Xi Jinping's economic approach, the so-called Xinomics?
Yeah, so I mean, the focus is definitely more on sort of quality of growth and sharing those sort of equitable gains where, before it was very much looking at efficiency and, productivity and gaining that sort of market share on the exports. And that's actually served them quite well. As they go forward, and particularly, when they're facing these sort of US tensions, tensions from other, several other developed economies, you are seeing that they're actually also turning sort of, more towards domestic reliance. So, moving up the value-added chain, for example. We've also seen that, this focus, it will continue with reforms. So, looking at those sort of reforms on sort of the tech sectors and the like, which also has actually been one of the sort of the things sort of underpinning sort of some of the slowdown and sort of one of the other sort of shocks China's been facing from the pandemic. So, it makes sense when you've got slowing demographics, you've got rising wages to improve this, but it will mean that it's going to be, we've got to be looking at slower growth in China for, we're not returning back to the sort of, without any sort of big dips and shocks, we're not going to be returning back to the 7, 8, 9% growth that we're used to seeing in China.
So the market still remains having a lot of pressure, remains tough. Thank you very much for your thoughts today, Sian. Appreciate your time. That's Sian Fenner, Director and Lead Economist at the Oxford Economics. Thank you for watching All About Money. We'll be back on HKIBC next Sunday night. Until the next time, see you then.